What's going on, viewers? This is CB Money coming at you from the Financial Daredevils channel on YouTube, where we talk everything finances. Viewers, please note the views and opinions expressed in these videos are our views and opinions only. Please do not trade based off them. Always do your own research. With that being said, let's dive into my Robinhood portfolio for the daily update. I currently have $47,519.94. I am up $1,235.15, almost 3%. The market is up over 700 points right now, and I'm loving it. Everything in my portfolio is green at the moment except for Alibaba, but everything else is looking green. Loving it. I hope you guys are making some money today too as well. A couple things are fueling this market drive today. A couple big stories that we're going to dive into in a second. But I do want to let you guys and gals know that I do believe this is just speculative optimism, that we are going to see a pullback at some point. So maybe begin to drip your money into the market. Don't put it all in, but slowly drip it in, because I do think there is a pullback coming before we go back up again. Viewers, as we can see, the Dow Jones is up almost 800 points at the moment. The S&P 500 is up almost 100 points, and the NASDAQ is up over 200 points right now. Wow. Will we get back to 25 before it pulls back again? That could be the case, but we'll have to keep an eye on that. Again, slowly drip your money in, and we'll talk about some of the stories now that are fueling this surge today. As promised, viewers, the main bit of news today that's causing the markets to surge is the Dow continues to climb on hopes of a virus slowing. In the article, it quotes Dr. Anthony Fauci, who is the director of the National Institute of Allergy and Infectious Disease, reported that he expects the numbers to be bad this week, but does expect a turnaround will emerge in the coming weeks. The same sentiment was echoed by New York Governor Cuomo, who said due to social distancing and the new practice measures in place, that the virus outbreak will be stabilized within weeks. The second bit of news today that's driving the market is Bernie Sanders drops out of the 2020 race, clearing Joe Biden's path to become the Democratic nomination. This is definitely driving the market with the coronavirus news, because Bernie Sanders was considered by many anti-Wall Street. So by him dropping out and Joe Biden now being the clear frontrunner for the Democratic Party and being considered more friendly towards Wall Street, definitely moving the markets up today.
In today's video, we will start an 11-part series going over some of the best stocks in each sector. This includes financials to materials to even technology. We will be hitting all 11 sectors. Today's video, we will start with the energy sector. This includes explorers, refiners, pipeline operators, retailers, drilling, equipment, and services. The energy sector has been the worst performing sector of all 11 over the past 5 years, and it's not even close. But you shouldn't be turned off by that. It could just mean it's the right time to buy. Nobody, after all, got rich buying stocks when they were high. For those that think oil is on the wrong side of history and shouldn't invest in it, just know this: the world consumes over 100 million barrels of oil per day. There are no alternative energy sources that can compensate for that quite yet. On top of it, the United States has gone through an energy renaissance over the last couple of years, become the world's largest producer of crude oil, and become the world's third largest exporter of crude oil. Oil is a must-own in everyone's portfolio. With that being said, let's dive into the 3 stocks that I'm looking to add in 2020 to my portfolio out of the energy sector. First stock out of the energy sector is the Energy Select Sector Spider ETF, for ticker XLE. XLE holds shares of 28 of the largest companies based here in the United States, but it is surprisingly diversified from its upstream explorers to downstream retailers. Companies in this fund have an average market cap of $130 billion. So we're talking the largest companies out there like Exxon and Chevron. The expense ratio is very low at 0.13%, with a high dividend yield of 7.31%. For those hesitant to invest directly into any of the energy companies out there, this is a good choice for a broad-based exposure to the energy sector. The next stock out of the energy sector is Cash Flow Monster Energy Transfer, ticker ET, and its 22% dividend yield. Energy Transfer is a leader in the midstream space, with its 9,300 miles of crude pipeline making it the largest in the U.S. With its assets in transportation, processing, and shipment space, MLPs have been hit just as hard as the rest of the energy sector, but there are strong reasons here to like Energy Transfer. Its management has spent $8 billion annually to reinvest in its asset class. Management has made some great decisions here.
11 analysts have a price target on Energy Transfer of $12.09, with a high of 20 and a low of 6. With Energy Transfer sitting right now currently at $5.65, there's plenty of room for upside. And while you wait, you can collect that beautiful dividend. Next on our list is energy giant British Petroleum, ticker BP, with its 10% dividend yield. BP is a multinational oil and gas company headquartered in London, England. It is one of the world's 7 oil and gas major superpowers. It's also a vertically integrated company operating all areas of oil and gas industry, including exploration and production, refining, distribution, and marketing. It also has a huge stake in renewable energy, including biofuels, wind power, smart grid, and solar technology, giving it a strong play moving forward. BP operates in nearly 80 countries worldwide and produces 3.7 million barrels per day. Looking at BP's 5-year chart, you can see it's just a steady producer. Of course, of late, like everyone else, it's dropped off due to what's going on around the world, and including the oil wars currently going on between Saudi Arabia and Russia. 10 analysts have a price target for British Petroleum at $35.75, with a high of 44 and a low of 28. With BP sitting just above $25 a share, it's got plenty of room for upside, and while you wait, you can collect that 10% dividend yield. Daredevil Nation, thank you for spending part of your day with us. Please remember to like and subscribe. It greatly helps the channel and we greatly appreciate it here. Remember, we post videos daily. With that being said, stay safe out there. Bye.